Can you save taxes by using your family? If you have a spouse who is not working, or if your parents are retired and they don't have any income, can you move some of your savings to them, and the interest or the returns come in their name, and so you end up paying less tax as a family? The answer is yes, but it's complicated. So the main reason why it's not so simple, why you can't just move, let's say, 1 crore in savings to your wife who's not working, and then she earns the interest in her name and pays less tax, is because of something called clubbing. Essentially, the income tax department considers that interest as your income only instead of your wife's income. And so you still pay the same amount of tax, the same rate of tax. But there are some loopholes. So the first loophole is that even though they do club the income from a transferred asset, the income from the income is not clubbed. So here's what I mean. Let's say you transfer a flat in the name of your wife who's not working, and she earns some rent from it. The rent gets clubbed in your name. But then she moves that rent into FDs. She creates FDs from that rent and earns some interest. So that becomes income on income, and that is not clubbed with your income. So that's the first thing to consider. The second route that some people adopt is to give a loan instead of a gift. So instead of transferring 1 crore outright as a gift to your wife, you give her a loan of 1 crore, you charge interest, and then some CAs argue that that income therefore cannot be clubbed. It's a legitimate transaction, provided you document it properly, you create a loan agreement, there is interest that is paid every month on time. That income cannot get clubbed. It's still a matter of controversy, but it's a possibility. The other option you have is to transfer your savings to relatives who are not within the dependent relatives definition. So typically, your spouse, your minor children, they're all considered as dependent relatives, and their income gets clubbed with yours if you transfer assets to them. But interestingly, your parents, for example, do not come in this definition. So if you transfer some savings to your parents and they earn interest in their name, they will pay tax, and it could be a much lower rate of tax because they may be retired, they may not be earning as much as you compared to what you would pay. And this is perfectly legitimate, it's perfectly allowed. And there is no gift tax either. So a lot of people ask that, is there a gift tax when you transfer money to your relatives, your wife, your parents? The answer is no, there is no gift tax for certain definition of relatives. Typically, those relatives are people who are your lineal ascendants and descendants, as in your parents, your children, there is no gift tax, or your spouse, there is no gift tax. So another legitimate way to use your family for tax planning. One last thing to keep in mind is that typically senior citizens have slightly easier tax slabs than non-seniors. So for example, the basic exemption limit for seniors is 3 lakhs, even in the old regime, instead of 2.5 lakhs. And for super seniors, those who are above 80 years of age, it's 5 lakhs of exemption. So that also works to your advantage if you transfer money to your parents who are retired for tax planning.